Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. The 8th. Tuesday, right? It's Tuesday, man, this week already. I'm losing track of it already, but you know, we got stuff going on. Market's getting interesting again. Difficult day yesterday. Let's go to the chart yesterday. So when I left off, oh, hold on. Ninja Trader's still loading up and is complaining here. So just wait for a second. When we left off yesterday, the robot still had the position. But here's the thing. The robot closes its position at the end of the session, and I have the session for the robot set up to be 9:30 my time, or, you know, the London close, essentially. So it got out, and then after it got out, the market yesterday, you know, I wouldn't say it tanked, but pretty good swoon. Let's see if it'll let us see it now. Well, it's never actively refused to bring up my chart. That is funny. But when I click it, it goes, things are still loading though. That's weird. Oh, Ninja Trader, I love you, but sometimes... There we go. All right. So you can see here, overnight was pretty bad, but then, you know, they recovered that. Started out okay, but then later in the day, a pretty good swoon. They tried to recover, but still couldn't reach it. And then now in the overnight, a little bit more bearish action. So another set of selling really could push us a little bit lower, but we'll see what happens. I don't really know. I have to say, one of the things that is really interesting to me about this market, there is definitely some news lingering out there, and it's like, we've been waiting forever, right? Like the Brexit thing is definitely like, wait, I'm so sick of Brexit by now, man. Vaccine. So apparently, according to, what was it? I forget the source, but we might get the vaccine news that we want on Thursday. We've also been getting some updates about how well the vaccine worked on different groups and things like that. Stimulus talks still ongoing, although a large part of the swoon yesterday, I think, was because of the stimulus talks. So it's like really hard to just want to hold an outright sell position on the indexes right now when you realize that some vaccine headline or stimulus talk headline could come out and just skyrocket us, right? So if I'm taking a short, it's definitely got to be a quick one. But I also kind of wonder, okay, when all of that news is through, then what happens? So we'll see. You know what? We didn't go through all the charts. A couple of other things we need to talk about. Hold on a second. Something changed in my audio settings, but because my desktop is a lot louder for some reason. Listen. All right. Anyways, treasuries. Treasuries recovered yesterday, and I heard some speculation that it was because of Brexit uncertainty. There was auctions yesterday. We got 3-year note auction today, which will be instrumental over there. We'll see where it goes, but you know, they retraced and then some that move that we had on Friday. There's still this move from way back here to where we failed 138. So I suppose that if we were to get an extended upside, that I would want to see if they beat that area. But I'm still thinking at some point that the sell is going to come back in. Oil is still just kind of ranging around since the OPEC meeting last week. Gold actually took a jump yesterday, believe it or not. I think that some of that, the move happened before the bearish action came into the E-mini. Also some concerns about supply side concerns, a lot of mines having issues. So I think that might be a supply side jump there. Copper is still kind of on the downturn, not really doing anything super special, and the dollar's still low. But you know, look at this. One pretty big spike yesterday. So dollar could be on the rise. We want to keep an eye on that as well. All right. Let's look at the text to speech here. Let's see here. We got Uzi, Brexit fight. I mean, it's been a long time for Brexit, right, Uzi? See Sam there. Manny, good morning. How are you? Okay, now we are getting some non-farm productivity and unit labor costs coming out here in 5 seconds. So I'm not explicitly planning on playing this move, but let's see if it causes. Okay, so the non-farm productivity is 4.6 versus 4.9.
Uzi Knesset says I remember trading the pound during the referendum lol. Uzi Knesset says seems like an eternity ago.
Yeah, well, I'm just surprised. I don't want to say surprised. We obviously we should have seen that coming, but I really did not consider that the negotiations to actually Brexit would be so long and filled with drama and stuff, you know? So how many times have we thought that this was going to be over? Like, this is the end, and then finally it's over and we don't have to worry about it for trading anymore. And then it gets pushed back 6 months or something like that, you know? It's just crazy. Oh man, people really want the Sierra charts port of my indicators. Too many of you guys use Sierra charts. I get it. I understand. I'm just too lazy to do that. I could do it, but some of the things that make those indicators unique might not make sense in Sierra charts. Other parts, like one of the things is that my market depth tape is like its own component, right? And I'm not sure if that's really a possible thing in Sierra charts, but whatever.
Vlad Stolyarov says I was short on that S90 spike into close yesterday. It was a false move. Hindsight disbalance was on sell side.
Oh, really?
Vlad Stolyarov says covered too soon, of course.
It's kind of interesting that we still see some pretty heavy imbalances going into closes, don't we? But I think part of it is that there's so much options interest out there still. They have an interest. I don't want to say interest twice in a row, but it seems like that they have an interest in forcing it to close at a certain area. But I don't know, not my game really,
Vlad
right?
Stolyarov says Tesla stock drops after $5 billion stock offering plan.
Now, this one is interesting because, Elon Musk might do some dumb things from time to time, but he is
Vlad
not an
Stolyarov
idiot.
says they will partially sell their shares.
He knows his stuff when it comes to the markets, and he's doing the right thing. If the stock is overvalued, you should sell shares. And honestly, it's probably a good thing. Otherwise, how would they be able to do this inclusion in the S&P 500 without some more liquidity floating around?
Vlad Stolyarov says he's a genius, always sells some at highs.
The thing is that I continue to see that.
Vlad Stolyarov says when people are shorting his stock, he sells red shorts.
Yeah, I'll see this like it's starting to do behavior that suggests that it's topping off, and then something will come along and save it. You know what I mean? How many times does that happen? I really kind of wonder if it's going to be able to maintain its momentum after its inclusion in the S&P 500.
Vlad Stolyarov says all year long.
I mean, do you think that it's going to stay up here, or do you think that it's going to be like the day that it's released in the S&P 500 is the highest it ever gets, and that's the end of that, you know? Oh, Bitcoin coin exchange founder sentenced to prison for money laundering.
Vlad Stolyarov says AAPL is 13% of QQQ AAPL weight in SPY 6.4%. Vlad Stolyarov says what will they throw out of SPY for TSLA?
Have they still not announced that? I haven't followed it. Now, here's an interesting. Randolph Thrower posts in our interest rates Discord. It's conventional wisdom that when the stock market swoon, investors flock to the safety of U.S. Treasury securities. That's not the case anymore, according to a study released on Monday by the Bank for International Settlements. Okay, so the Bank for International Settlements are no slouches. They're like, so every other month, all of the central bankers in the world, like the governors of the central banks, get together and have a meeting at the BIS. And they do research and banking related to central banking. So if they come in and they say, hey, people aren't going to treasuries as a flight to safety anymore, the BIS says it, matters. Now, the question is that the intention? I don't know. They want people to keep the risk in the markets, right? I don't know. That's interesting study. Donald Trump tweeting about the National Defense Authorization Act. And my contact is itching me today. So is it just me, or is the thing a little dark? Let me check my camera settings here. That's a little better. You are very bright. Now am I too bright now? Well, I don't need to be 34. That's a little better. Oh, you know what? There we go. That's really the problem. Probably not completely in focus either, but Treasury's still getting the bullish tilt to them today. Well, if I want to try and get involved in this market, I don't think that 26 half buy there would make sense. I think that I would want to increase my spread here a little bit and try and get it to come back. So now let's fix this. There we go. That's a little better. All right. Back to Twitter. It says equity futures roll from December to March on Thursday, December 10th. Sounds about right. Should be able to run my strategy now. Yes. Okay, cool. That might change the volumes and disbalances that are on those. You know, I have never found it to really affect like like the market on close imbalance or the imbalance caused by gamma. But what it does do is it makes any kind of order flow reading extremely difficult. Right? You go and you look at those volume profiles and they're all messed up. Yeah. Yep. The market year says Georgia it will be a nail biter. 538 release polls of the Georgia Senate finding that the Democratic challenger leads in both races. One can acknowledge the lack of trust and issues in polling from 2016 to the present, but some may find this a useful base for analysis. Predict a little different, though. Second chart. Prediction markets now give Democrats a 1 in 3 chance of controlling the Senate. That's interesting. But I think that almost all of those polls, particularly the ones in the Georgia race, were off by like 2 to 4 points before, because they said that the Democrat was going to win in those races, didn't they? We'd have to go back and look, I guess, because I'm not sure I 100% remember. Peloton shares fall 3.8% with Apple to launch future of fitness. Oh, really? Apple's going to launch the future of... Okay. Is this for their watch? Ooh, Costco reports today? Oh, man. You know what happened to... yesterday? So the stock... you remember that we've been watching Sumo Logic? Did you look at that one? Oh, man. Well, let me pull this up. It's kind of funny to think about it, actually. Maybe I'm still too right. Let's go down to 25. I think that's a little better. Okay. I would watch Amazon make all-time highs if I would ever wake up on some news. Okay, so the stock I've been watching, Sumo Logic. Sumo Logic. Give me open, high, low, close. Sumo Logic. So they got as low as 17. Back here, this was the IPO. And yesterday was its earnings. Look at how it moved up in anticipation of its earnings. Yep, I see cloud-based data and analytics. You know, I think it's so funny with a lot of these companies that are like in the cloud space and everything, they use all of these buzzwords to sell it to investors, and it doesn't really explain what they do. So let me explain what Sumo Logic does, because the reason I like this stock is because we use it. So I do site reliability engineering, or more particularly, I program tools that support the SREs. That's what we call them. And one of the big issues in IT right now, especially with everybody moving over to the cloud, is that site reliability tools are not really in a very good state. Like it used to be, or in some areas, like say code repositories, for instance, is a good example. GitHub has very much become standard, and how people use GitHub, and there's all the, they've got that figured out, right? Site reliability and monitoring, they don't got that figured out. There's like 50 different tools, and they're all different and have their own quirks. And then you're trying to integrate it with a bunch of other different systems, and you've got build systems and deployment systems and all of this stuff. The big thing right now is Terraform, which is something that allows you to like define what the system configuration is supposed to be, so that when you want to start a new instance of a server, like you want to shut down the server and then recreate it, you can do that really easily. Okay, right? Well, what Sumo Logic does, Sumo Logic is the one system at my work right now that like I trust, that I'm like, this works well, and I expect that we will be using this for a very long time. Okay. And what it does is you put an agent on the machine, and it will upload all of the logs on that machine into the cloud. And then you can search through those logs, and you can set up alerts and analytics to run off of those logs. So for instance, you can generate analytics about how much your web server is being used by looking at your web server logs, and it will log every time somebody visits it, and you can generate a bunch of stuff on it. So that's what Sumo Logic does, right? You pay them a yearly fee, and they keep all of your logs for you. That's what they do, okay? Well, if you look at the stock, look, somebody caught wind that the earnings were going to be good, and they were good. And when the news came out, they beat the analysts' expectations by quite a bit, and every number in that earnings report was good. And what happened? They sold. Buy the rumor, sell the news, right? So that one's kind of funny, isn't it? They did a really good job, and they it's almost like they got punished for it because of the traders. Well, what else we got going on out there? Oh, Rare Earth Resources got hit yesterday too. I wonder what's going on with them. Maybe they're doing something else. Apple. So Apple is looking pretty bullish with this future of fitness stuff, huh? Yeah, and Tesla getting taken down a notch. Do you think that Tesla will get back down to 500 though? I don't know. Like, I really feel like in order for there to be a move down in Tesla that's makes a difference, you'd have to get below 500, and that seems so far. I also see that yesterday the VIX was actually overall down despite the index is swooning. Once Tesla trends, it can go 600 in a day. Well, yeah, that's a good point. That if the sell ever comes in Tesla, could be very quick, huh? Okay, let's see here. Apple Fitness Plus, the future of fitness, launches December 14th. Cupertino, California. Apple today announced Fitness Plus, the first fitness experience built around Apple Watch, is launching Monday, December 14th. Apple Fitness Plus brings studio-style workouts to iPhone, iPad, and Apple TV, intelligently incorporating workout metrics from Apple Watch for a first-of-its-kind personalized and immersive experience users can complete whenever and wherever is convenient for them. Oh, so you tell it you want to do like it's basically like yoga classes at the gym, but the phone tells you what to do, and the phone can keep track of how you're handling it so that it can adjust your workout accordingly. Oh, it's going short here. Interesting. It doesn't. Oh, I might not have saved it. Yeah, okay. Let's fix that. Hide it. There we go. Oh, okay, it did. How come it's not auto? Okay. ZV is running and I can't catch it. The treasuries really are pushing, aren't they? When was it when I came in here and I was like, well, I don't think that trying to make the market here at 26 really makes sense, that I would need to move my spread. But look, if I had tried putting in any limit orders, I wouldn't have gotten filled. So Maxwell, how are you? They pushed it up here. Very little volume. The market makers don't want to hold anything here. It's crazy interesting. Well, I'm not seeing the dollar really jumping up, but oh boy, that's a bad. As you're trading for so far, do you complete the... So I don't do combines. I trade my own account. Although I will switch between sim and my own account based on, how fertile I think the market is for me. Plus right now I'm testing a couple of things. We'll see how this short works. I've definitely had periods where you would pass a combine, but I wouldn't do it every month. I look back on my performance, probably what would happen is because I've done combines before, right? But I realized that it was better for me to trade my own account. If I had kept doing it, I think that I probably would have gotten funded twice now and then lost the account. because I will have benders on me. Now that said, if you want to pass the combine, here's how you do it. Just have a really big stop and be lucky, and you get in. And I know a lot of people that have done it that way, actually. A lot of people doing it with what they consider price action, but also with large stops. But yesterday, have you guys seen this? If you are, by the way, if you are like programming and doing back tests, I would really appreciate if you go and participate in this. But on Futures.io, I went and created a thread called Show Your Backtest Results. And somebody showed me a backtest result that I was really impressed with. Like, not only did it take a lot of trades, but he said that it was based off of order flow, or not order flow. He said it was based off of price action techniques. I'm going to guess that it's really more volume, and so then maybe we could question how price action-y it really is. But he was hitting a profit factor of like 1.7 off of it, and I was quite impressed. It didn't have as high of a Sharpe ratio as the algorithm that is running right here, but that's probably fit a little bit. So yesterday I started trying to do it on further back. So I did it on 2 years, which took a long time. Tomorrow or tonight, I'll try running it on like 4 years and see if it can handle it. But when I looked at last year, even last year, it still came out profitable. It wasn't great, but it's still worked out. But the Sharpe ratio wasn't over 1 when I included 2 years. Now, hopefully, when I include the other side of the strategy, the range-bound side of the strategy, that changes. Let's see. Okay, so that treasury is really not holding back yet, is it? Well, I guess these thousands that we're seeing here at 28.5 is probably the most that we've seen, but it's really curious to me why the market makers are pulling it out. What do they know? Let's tweet about it. So I don't know what it is that's going on here, but it seems to me like the market makers in the treasury complex know something, don't you think? I feel like since Biden was elected that the bonds are very bullish, says Sim. Well, they've gone both ways. Let me show you. I think unfortunately that's a little too simplistic. So like here is the 30-minute chart. So this big move up was the election, right? It's pretty crazy. So like what happened was initially Well, I don't know. The whole thing was kind of weird. Initially, they moved down, and then they moved up. And I can't remember what the deal was, what we were thinking. Oh, why did it move up? Maybe it moved up because the contested election scenario suddenly became more likely or something. So then we ranged around there. And then we had this one day that was just a bender. Look at that. Such a strong move that day. But do you see how it's been like, we'll kind of have these slow moves up that I'm kind of sitting here going like, okay, I'm not sure what's going on. Auction, maybe some fear about Brexit. I'm not sure. And then you get goodish, you know? So like, I'd say that there's two sides on this trade in the treasury market. One side that really feels that there's so much debt about to be issued and that the market really can't handle it. And then there's a side that is buying it for, I don't know, maybe part of it is that they just have to. But yeah. But there's that fear. I think that this scenario where the treasuries move down significantly, and honestly, all it would take is a move below 137, which is not that far away, to really trigger some real fireworks in the treasury complex, and that could have some very negative impacts on other markets. So it's just it's so close, you know. It's all fake, so based on price action alone, it's fair. Well, E-mini had an okay sell there, but it didn't. British Prime Minister will meet Ursula von der Leyen, European Commission President, this week to try to resolve outstanding issues, although a date has yet to be set for the talks. Okay, well, they were willing to sell at 28.5 and 28, a decent amount, and the market makers took those ones. NF prod. Oh, you think that it was the non-farms production number? Let's see here. Alligator was hypothesizing that it had to do with the non-farm productivity number. But I'd say that that's probably pretty in line with the expectation. Labor costs down. Means less of a reason to push, I guess. It is in line. What he's saying here is in line. It's just that it's like it was such an insignificant difference. I kind of. About spreads. Let's look at spreads here. So I can see that they're flattening again, and they're actually flattening below where they were 2 days ago in the 2 and 10. And even kind of here in the 30-year, huh? So if we wanted a short, we'd actually want to short the 30-year. It's been a long time since we've seen that. I don't know. What do you think about that one, Uzi? That seems a little sketch to me that you would want to be selling the 30-year right now. But we don't want to short. You want to buy damn treasuries? Well, 27.5 is as good a price as any. You think they got more in them? They're going to have to pause here for a while. In fact, I'm going to bet you that they got to come back almost all the way. I'm not confident in holding bids there. But let's see. That one's kind of hard to predict. Yesterday I had why am I telling you this? Yesterday I had a huge booger in one side of my nose, and I was finally able to blow it out now. So much air. So my robot has been going pretty good. I'm not entirely sure that it works for the reasons that I thought it did. We'll see if they move on the open. Well, I don't know. It's pretty slow overall, though, right? Like, the robot went short. It's caught a few favorable ticks on it, but I can't see myself trying to take a short here. It's just not really moving. Oh, cool. More posts in the backtest results thread. Let's see here. That's not bad at all. It's a guy posting a strategy. It wouldn't match my qualifications, but it's got a profit factor of 3. He is making... not bad. Wait, how is he doing that? Oh, there's something wrong with that strategy. No. His average winning trade is almost 600,000. What? Wait, what? Wait, what's his average holding time? Why didn't you show the average holding time? It clearly must be a multi-day strategy. It says that it's made $40 million. That's funny. And only 137 trades over 5 years. Yeah, that's interesting though. Still. It's still interesting, guys. No, lots of interesting the way that people are media outlets are playing the CME started trading water futures. So I was never able to figure out how to. I tried spending a little bit more time trying to get it to show up, but I wasn't able to figure out how to find the symbol on Rhythmic. But people were showing some DOMs on TT, and when you looked at it, you could see like one set of orders out there, and that was it. Like literally nobody was trading it. And the spread on it was literally like $500. It was like a $500 spread on one contract. I was like, obviously there's some opportunity there, but you'd have to have a big account. But I bet that you could just go and write a robot that looks at that index. And I don't know where you get that index data from, if it would be included with the NASDAQ indexes or not. But you just get that index and just have it trade it with the index. And you could probably do okay because there's like nobody trading it. Sounds like all of the small exchange. Is it really? There really isn't a lot of liquidity out on the small exchange? Well, I kind of want to get on that. So I've been wanting to switch over for a while now, but things keep coming up or I screw up. Which, by the way, reminds me I need to go check something over here. Very little 10-year started yesterday, but I didn't find it on Tradeovate. So wait, who was your broker? I hate it when it does that. That's okay though. Oh, Tradeovate is your broker, of course. I gotcha. Oh, I didn't know that they had access to it. So I was thinking about I wanted to go over to EdgeClear. Well, things are fairly thick in the treasury today. And slow, frankly. This guy is saying it's a live money strategy, must be full of shit because he's taking $100,000 on his average trade. What? No, I don't think so. I'm not sure I believe him. I should close it. So I stopped thinking about it because I'm like, there's no way. Really? I mean, if he is, well, I don't know. I don't know how useful it would be to talk to him or not, because if he's swing trading, it's probably not going to give us a whole lot of stuff that's relevant to us right now. Right now, I found us. So, which instruments on the small exchange did you look at? Because I would love to go and short the dollar, for instance. But I guess if the spread is really poor, it might be hard to get any kind of... Trader Urban Myths number 4. Traders need to be aggressive. Amp, did you know that Amp has been like posting blog articles? Not really trading anything with it. Maybe the 10-year will see some volume. Yeah, I bet you that the 10-year will probably make it easier, because at the very least it might not have a ton of volume, but I think that they would probably have a good spread at the very least, right? Like, it would be really hard to trade it at all if it wasn't a large tick, if it wasn't one tick spread. I mean, there are some advantages to trading in a market where there's a wide spread too. It's a different game from an order flow perspective, right? One that I'm not nearly as familiar with. You would kill for a micro ZB? Yeah, you're right. I think that a micro ZB would be great. 1/10 of the ZB, so that a tick is $3. That'd be awesome. But then the 10-year that would probably move even more volume over to the 10-year. I'm wondering, I'm betting you that the CME is very, very happy with how the micro ES turned out, right? So then the question is, what's stopping them from continuing on that one, you know? I have to say, like, yesterday was a slow day. I feel like today has been even slower. Interestingly enough, though, since my robot took this trade, it hasn't had it go against it yet. Equities are cash settled, so micro and mini and micro are fungible. This is funny. It's an utter clown show and has been for months. It's almost a satire in itself that Congress can't act in this crisis, even with imaginary money. How does it qualify a trade? So it is looking for a cross of my buyer or seller cost basis with a statistically significant market order impulse ahead of it, and it requires a certain amount of consistent trend. So with the way that I have it set up, it'll tend to take 2 or 3 trades a day. I've only back tested it, and I've only back tested it on 2 years. It looks pretty good. I'm still working on it. So one of the things that's interesting about it, let me just show you how this all works. So I've got this indicator. You can download it from speculatorset.com. And it's this blue and red lines, and these are calculated positions from people. So I thought, oh, okay, you want to look at it on the overnight, and then you want to look at it on the regular session. And there's definitely something to that, where you will see when the regular session starts, they'll try and go for the overnight positions. So like if the regular session starts and they decide to buy, they're going to go for that 36.84 almost for sure. Like that gap is almost guaranteed in terms of like I can't guarantee that it's going to go that direction, but if it goes that direction, I can almost guarantee you that it will touch that. Right? And then there's this dotted line on the other side is kind of like if it's a strong trending day, that's where the market makers on the sell side lose money. So that's how it's doing it. But when I started backtesting it, it's a tick replay indicator, which means that it takes almost 20 minutes just to run it on 1 year of data. And that's when I only run the indicator on 2 or 3 hours of data a day, right? So I went back and said, okay, now that we've got this all figured out, let's see if it works for the lines that you would get from overnight or when you reset it on the regular session, okay? Because this matters when it resets, okay? And the longer that it's been going, the more error that is going to build up in there simply because of stop losses, for instance, okay? That's what kind of messes it up, right? So when I test it on that one set of data or that one time frame, it works really, really well. And when I increase it to the larger time frames, it doesn't. Now, maybe that means that those larger time frames, I need to take a different approach, or maybe I've just kind of found something important that is like, what really matters is the positions from when the morning US traders start trading, which is around our time and going forward. But anyways, that's how it qualifies a trade. So do you see here on this chart down here? Over here is where it was. And do you see how there was a significant drop in cumulative delta there? So that was the impulse that it got, and then that impulse pushed it over the line, and so that's why it took a trade. So we'll see. Yeah, thank you. But it's still in testing. So my plan is to, yeah, it reads order flow. Yeah. My plan is to run this one all week and see if it runs the way that it's really supposed to, or if there's any bugs in it. Yesterday, it went long and it got out before, it didn't reach its target, but it got out before the drops happened yesterday. Otherwise, I think that yesterday would have been a loser. So yesterday, it got lucky, I think, is how I would put it. But I might need to just go back and look at things again for the extended session, because maybe some of the more simple things that I tried might have worked. This might, and that's where I'm saying I might not work for the reasons that I think, because it's supposed to be playing off of people's positioning. But I think that really what it's doing is it knows where the balanced area is, and it's trading off of an impulse trying to push it out of the balanced area. But trading after the first hour is dodgy. Well, it's the first 2 hours that it trades. So I find a lot of good trades during that time too. So, you know, it used to be that I would only trade until about 8:30 my time. So that first hour, and then like nothing would happen, and then I would leave and something would happen. And it almost feels like that it's done the same thing. Now that I stay until 9:30, they wait for the London close and then they do something. It's like, what the? It's frustrating AF. Now, I have another side to this strategy that I haven't worked on a whole lot yet, but is actually more effective. And that is, it tries to trade between the two lines. It tries to just take the distance between the two lines. And that one was getting a profit factor of like 1.3. But I didn't apply any kind of optimization to it at all. And based off of what I found with this indicator, there's at least 1 or 2 tricks that I can do that could help significantly. So, and then hopefully I combine them together, and the overall strategy will be really consistent, because it will be able to switch between trading a trend day and a range bound day. But we'll see. The question is, when you take them together, how often do you get signals that clash? And then if you do get signals that clash, how do you decide which one it should really take? Right? Because you get in and you find it takes less entries on this one particular setup overall, because it was already in a position that it wouldn't be in if it was just trading on its own. I must say, it's really like it hasn't moved even in the E-mini in almost an hour, right? That's quite surprising. It's cold in here. Check the thermostat. I've been having trouble with this Nest. It's like that the heating in my home is not as good as I think it should be. Cooling is fine, but the heating, it's like, I don't think that the house is as insulated as it should have been. Yes, that's what I'm like, what am I looking for here? What's the name of the app? Well, it says it's 70 degrees over here. Oh, no, it's not. It's 65. So it's doing this nonsense again. It's because my wife closed the door, probably. I guess I'll just have to handle it. It's not too cold in this room. It's probably 68 in this room with the computer. Man, my eyes itch a lot. I hope I didn't I need to be careful, because I don't want to break a blood vessel again, huh? Okay, I could have taken 27.5. So here it's like, I kind of suspect that there will be buying on the open. The cumulative delta is buying, even though it hasn't moved. You say buyers dried up. Well, something has changed in this market. It might just be a December thing, but there's definitely not as much action before they open as there normally would be. What is it there? There's actually a decent amount trading here just before the open, but it's not, even though there's been some volume, it's just like in an incredibly tight range. And there's another tick up in the treasury. Mount Everest is officially a little bit taller than before, huh? Okay, so pretty strong buy impulse there. But look, the treasury's still pushing up. What? Hmm. It's so quiet. It's making me sleepy, and my eyes are like crossing. Okay, so it stopped the robot out. The treasury's still, wow. Wow. So this is where I'm always asking myself, like, okay, is the treasury having know something, and there's something bearish coming through, or is it completely different dynamics? They look pretty disconnected, but that came back up in the 10-year treasury so very quickly. Okay, they made some good progress on shorts, and then buying it just came back through and brought it back up very quickly. I sense a little bit of exiting of positions over in the treasury there. Okay, they're gonna try and make a rush for the open. Looks like the long volume has all come out. S&P believes Royal Caribbean's recovery will take longer than expected. Yeah, I agree. I think it'll take decades for the cruise industry to recover, man. Who wants to go on a cruise right now, man? After what we know about how it spreads the disease around and everything? No. Portugal 10-year bond yield falls to 0%. I want to go if it's a space cruise in a spacesuit. Yeah, I'm sure that they'll do a study on the impacts of coronavirus on space travel and show us that it's safe. Because they did that for airlines, so. I should have taken the last one, but. Why I feel sleepy, man. You're still waking up too, I guess. I skipped out on my Strateria yesterday because I ran out, and I think that taking that this morning is probably calming my nervous system down and making me feel sleepy. Okay, so you're seeing 1,000 lots up in here. The market year, yet another thing that would support the year-end rally thesis. FOMO, a majority of funds underperformed in November and thus may be tempted to chase the rally. Curious. Okay. Oh, the treasury is still pushing up. Ah, that was a bad spot, apparently. Wow, they're going to push up to a new high there off of like a considerably less cumulative delta. Sure looks like it. It's kind of a slow read today, isn't it? I'm like literally falling asleep. They're ticking into the high. They're not clearing it yet. Okay, there's one click into it. Later HF. Interesting that my bids aren't getting filled. You got a few more points to go before the high. You can actually see retail have a big order up there. Small green. I'm so my head is so messed up right now that I'm like not even talking. I'm sorry. And you can clearly see my read in the E-mini is like way off. Curious, 4,000 at 29. Was that the third one? It was. Well, not, or technically not the third one, but. I'm gonna try it again here. Hmm. Okay. A little attempt of a recovery. They smacked into a wall and almost immediately dropped 4 ticks, but some unreliable liquidity locations in the ES. And the treasury goes up there again? You say treasury only up, yeah. Well, I'm not planning on holding this like is it going to come all the way down. I was just trying to catch the range, but Robinhood says investigating a service disruption. Well, I am just noticing the Squawk was talking about Brexit news and noticing that the British pound has been moving quite a bit this morning. Pretty big move up when we started, and then a retracement of that move. Difficult market to get fills in, guys. Seeing there in the E-mini, it looks like the volume is buying, but it's just not really going anywhere. The market makers are just offering out a lot. Then in the treasury, in this case, it looks like that the market makers are actually taking the fills here, but you're just not getting market sellers at all. Trying another one, Ace says. So even for us in the 10-year, if we had a position that was long instead of short, you wouldn't be able to get into the position because they're not giving fills on the bid. I guess maybe at 30, they'll let you buy one tick below the high. clicking a little bit here. Order book maybe changing a little bit. Yeah, I've got 687 too, actually. Interesting that our numbers line up. Okay. Yeah, same here. That's exactly what happened to me, Ace. It took 2 and that put me break even. The Babylon Bee Men's Health magazine celebrates body positivity with first obese cover model. Oh my gosh. What? Wait. Oh my gosh. Oh my gosh. There you go. You are perfect the way you are. Oh, that is... People are going to get so mad about that. Oh. I think it's hilarious, though. Dismantling traditional views of health and fitness. That is totally what they do. That's so funny. Oh, I can't... How did they do that so... Men can't be fat. That's illegal. No, it's from Babylon Bee, which is a satire website. It's satire. But it's funny because there's been women's magazines that have done stuff like that, and when you do it with a man, it sounds so ridiculous, doesn't it? Oh, that's so interesting. They man, they really dismantled that one. I would never have thought of that. Okay. Goldman Sachs Curie predicts a long-lasting bull market for virtually all commodities. What? Something has to go down, guys. So, like, something has to... The money has to come from somewhere. So something I find incredibly bizarre is that the Treasury is trying to make its pushes up as the E-mini breaks its highs. Why is that? J-Pow confirmed how he makes money on the computer. Well, Robinhood says all systems now online. Okay, cool. So we can keep buying again? Is that what that means? Are we close to... oh, we are. I mean, the next leg up in the treasury, which would be pretty high, but here there's some pretty significant resistance here. Let's see what happens. Well, let's just see if it'll let us work it out or not. Okay. Well, I knew I could get 30.5. The E-mini is honestly just like all over the place, isn't it? I'm optimistic we're going to get somewhere McConnell's reporters, but I have no report at the moment about how. Do you need to reset these? These I don't need because I got out of those. Okay. So I see maybe some support coming in here for the E-mini. We'll see if they can push it this time or not. And the treasury is kind of reverting back, but you're still not really getting the people hitting into those bits. You know, like they They cleared 30.5 once or twice, and now it's holding. Still not. Still not really going for it. Okay, look at that. That was a stop run. And my target's moved a little bit. If they can't crack it down, well, I don't know if they were really trying to crack it down. I don't know. Even though there was like movement in the cumulative delta and everything, that was all really sketchy action. And you got out. Didn't quite tick into 3688 yet. In fact, it didn't go offer. It never became the best offer. It's close. They didn't clear that 87 3/4. 87 pack. Okay. So now you finally get a good tick down on 30. I think we stand an okay chance at getting filled at 29.5. That baby is banging on the door again. U.S. Treasury Secretary Mnuchin and White House Chief of Staff Meadows, U.S. Senate Majority Leader McConnell, and U.S. House Minority Leader McCarthy are discussing stimulus today, says source from Bloomberg. Amazon's warehouse storage policy causes small businesses to run out of holiday pop products. Oh, really? So they sold everything and then Amazon doesn't allow them to store enough? Threatening that high again. It's pretty quiet there, though. Okay. Finally got filled on that. I took a lot of risk to do that, but it worked out, I guess. Texas sues 4 battleground states in Supreme Court over unlawful U.S. election results. Okay. Something tells me that won't do anything, but that's interesting. Okay. Another potential look, but still fairly calm and slow. Yeah, you get those sorts of things, like when the cells come in. Same with when the buys come in. Actually, those buys outnumbered the sells by quite a bit. Still not enough for new high, though? Oh, well, somebody really sold it there down at 36.87. It's a pretty curious action over here, I'd say. It's a pretty significant change in volume there. The E-mini. They saw your spoofs. Oh, you're that guy at 3282? Wait, where am I saying? 3685. My brain is going today, guys. What the heck? Blue Crest fined $170 million for secretly replacing top traders managing outside money with underperforming algos. Curious story. According to EU source Michael Barnier, told a meeting of ministers this morning that the chances of a deal were now very slim. I think that I want to flip here. Oh, what? Well, I guess that was a mistake, but no way I would have known that it was about to do that. As bids just got collapsed and just got slaughtered, man. That really caught me off guard. That drop at 29.5. The way it just plowed through it so quickly. Now that said, I don't think I should be trying to push my luck here on the treasury, so I can just kind of scratch that all out. Pretend it didn't happen. Actually, let's try a little more serious one, okay? Come on, come to daddy right here. 36, 76, 75, the open. Seeing some dollar strength. Okay, well, they didn't touch the open yet. Wow. Snowflake claims 9%, extending its 4-day gain to 45%. Why can't they do that to Sumo? Come on. They had good earnings too. Oh, well. We'll keep an eye on it. Almost. You can do it. You can do it. Come on. Nope. Like, nope. Not that price. Usually got up that size. Goldman's weighing plans to house a key division in South Florida. South Florida. Oh, what's that Bloomberg article? They just don't want to touch that open. They're like, no, wait, buy the dip. Well, that 79 might be worth a buy. Now, did you take any of that short, Ace? Okay. You got panic short at 85? It's funny to me that I didn't really freak out about it until it got down here to 81. Have you a market maker? Yeah, it's gotten really slow, right, Ace? We're gonna have to make some adjustments. So I was saying maybe we need to start to do an investigation as to if the R squared can help us. You know, I guess I didn't realize, but that open was more than 32 ticks or whatever. Pretty good excursion on the sell side, though. They could pull back here and then go for a much deeper sell to 72 area. But now it looks like that I'm screwed. I don't know. It's kind of turning in areas where I can't really expect it, and you're not really getting things to run, so. And the book is thick. Okay, but the treasury coming back there a bit now. Look at that. How are they doing that? Oh, go long. That should stop it. Jim Cramer says market's starting to believe vaccines could help COVID in U.S. in second quarter 2021. I kind of, well, geez. This market is just kind of all over the place, isn't it? It's not doing terribly bad things to me, but well, that one I really gave up a lot of favorable excursion on that, waiting for it to go to the open. It feels really random to me, though. So I'm not quite sure what I would want to do. The right thing to do for this is, other than maybe not trade it, because clearly not sure what's going on. I thought that Brexit headline was, and the move down off of that was a pretty good trade, but I really thought that it could continue and go below the open price, and now you get this buy rush come in that's like, and all of the buy pressure in the treasury is almost completely disappeared. Just like that, apparently. Look at this. Well, maybe it's, I'm complaining about the market, but I'm also feeling really sleepy today and not on. So, it could just be me being a little flat footed and not too sharp, you know? That should have been a fill. Oh well. I got it anyways. Of course it goes against me. Gosh dang. I mean, the trend looks pretty okay, but then I think that the tape in the E-mini is deceiving me a little bit. Or I'm just like misreading it really badly. Because some of the spots that I've taken haven't been very good. In fact, some of these never got favorable excursions. Some of them did, so it's not like... So I'm going to have to read that on a misreading of the market action here. Seems there's something about that 29.5. Look at that. All right. It would be nice to have order flow show on charts. Well, you're seeing that over here. That's what this bottom right corner is. Well, the reality is that the chart can't show it as if it, what is the word that I'm looking for? The chart just can't show it as efficiently as the DOM can. So on the DOM, I get a really good view of the movement, the volume that's going through, and the level 2, all by looking in the same spot. And I can do that across 5 different instruments really easily. And I just can't do that with a chart. Not sure what you mean then. Know the numbers. Well, you could have the DOM, the level 2 show on the chart. Is that what you mean? Like a level 2 indicator on the chart? I have one of those written. I don't like them at all. Yeah, I like seriously, the DOM is just way better at showing that sort of stuff. Because you get the lines, you know exactly what price you're talking about, and you see it come back and everything. And when you're looking at the chart, your eyes are drawn to the movement of the price on the chart, right? The reason to have a chart is to see price movement. And I've discovered in all of my testing and everything that doesn't matter quite as much with order flow kinds of things. That a lot of it is all just random. You're way more well, thank you. I have to admit I'm having trouble in this market. I mean, I'm maybe not trading it as seriously as I should, and I'm definitely off today. But it's a pretty random market, right? Like, I'm sitting here like, well, if I was going to try and just take little bits out, I would only be able to go for like 1 point. And some of these ones in the treasuries, it really has been only 1 point. You get a headache looking at the DOM? No. Yeah, I don't know. It does happen to everybody. It's true. And I'm sure that a lot of people are starting to have difficulty with this market because it's not the same one that it was like 2 months ago, is it? During the summer, that market was easy to trade. One point with 50. Yeah, but how are you going to hold the win rate that you need to work that sort of thing out? Especially when the issue is that it's so slow, right? I don't know if you could really pull that one off without like a queue advantage. Cherry picking, I don't know. I mean, really, when you think about it, coming in here and taking on more risk, which is kind of what I've done here, when I've moved over to the more experimental accounts, it's essentially doing the same thing, right? So when you take an extremely small target, that just means more risk when it turns badly. Or right, you could think of it as you're increasing your probability, then your risks also increase. Well, I'm not really seeing a limit on the upside here now. I need to come and look on TradingView and look at our VIX levels, because it's kind of suggesting to me that the way that the positioning is, they could go up for a bit. Okay, so 37.01, so they could go back to like Friday's prices. Still not taking it at 29, huh? And we're definitely seeing something where when they get up there to those highs, it doesn't, the buyers aren't being super aggressive. Like the market orders aren't being aggressive up there. The market orders aren't being aggressive down here at 29 in the 10-year treasury either. I know these cues over here look pretty stable too in the 10-year. I don't know what the deal is with 29.5. That one's been weird, but and there's the new high. Some stops. Oh, there was some stops on that. Wow. There was really some stops on that one. So, what do you mean by stops there? So, when they passed, where was it at? 87.75. So, right here, as soon as they started ticking into 36.88, you saw orders come in and almost immediately push us up a point, with a lot of orders going both ways. So, there was a lot of people playing the break of that, and probably a lot of retail getting stopped out. And now that they did it, they're coming back probably because the very, very short-term traders took profits there. Here in the 10-year, this 29 still looks really stable. And there's not a lot hitting it. Seth, good observation about behavior up there. Check out my conversation in the comments with Alex on Axios' latest Elite Trader video. This is what I've been saying here for some time. Okay. Or was there like a key level there or something? Talking about this one where he was trading the gilts. Oh, yeah, that's interesting. Live action. Yeah, in the Axia Futures one, they're saying, he doesn't use the volume profile, and they're like, yeah, they're right. But like, I don't really use the volume profile either. I mean, I totally get. There's definitely some things to those areas that people look at those areas and believe certain things about them, but I have been unable to tease out any kind of edge out of those locations, and I'm not convinced that they really matter to what we're doing. What matters more is where the liquidity goes and everything. And even then, it's more about like I really need to have a fundamental belief about what it's going to do, right? Well, that's going pretty good there now. That long. You know, I'm interested in this price. They go right through it. I'm interested in this price. They go right through it, and this price they absorb, and this price nobody's really interested in hitting, right? And that tells me things about what the market makers and the informed traders believe about the current state of trade. That when things get really, really fast, you can really use to your advantage. Because usually when things go really, really fast, you're going to have an idea of what's going on, right? Like, you're going to say there's this piece of news came out and it's good for treasuries and it's going to move the treasuries up, and so I want to buy it. And so then it just turns into, okay, well, what can this tell me about where I should buy and sell, since I know where I actually want to buy. And then especially when you're working on a position. true volume profile is Mickey Mouse stuff. Well, you know, one of the funny things is that the way that a lot of people traded, I think it was kind of funny. Like, there's a step in the profile. We had somebody who was here earlier, and they showed us some good trades off of their profile, and we were actually kind of writing something about it, but I forgot about it. It was complicated, but just because there was a step in the profile there before doesn't mean that there will be again. And that's where what I'm really watching at is coming over here and saying, okay, are they hitting into that area? Are they absorbing at that area? Or were they doing that before and now they've gone up and they've come back, and what did they do? And if they came back and it's changed, then why is that changed? And how did it change? So, you know, if, for instance, 28 was the pull and they traded down through 28 on only 500 contracts, then I would be like, oh, shit, right? Because that means that the market maker no longer wants to hold bids. And what has changed for him that he no longer wants to hold bids, right? But the thing, one of the things that I would point about that comment, that interaction between live action and Axia, seeing how the order shift into what is being transacted at market, understanding a shift in velocity, reading correlations across the markets, and using all of these to constantly refine and adjust your positions. So so they took 35.91 to get through 28. That's also something that's like the market maker was willing to hold it, but there was some informed traders that really wanted to sell it through there. Right? So now we're doubly screwed. What's so frustrating to me in the treasury is that I've been okay at playing the queue and everything, but I've just had the direction dead wrong every time. And I kind of look back and I'm like, okay, so why did I do that? Well, because there's trend or whatever. Like, I don't know if I had a good enough reason to be going along there in the treasury. Okay, so look, they came back up at 27.5 and 28 pretty easily. So I'm not entirely sure that the informed traders in the treasury are super adamant about that down move. It was probably in large part because of what the E-mini is doing here, which is actually getting quite cuckoo. It was a stop hunt. Yeah, probably. Well, I'm not even a stop hunt. Like, that's what I'm saying. Like, look at the correlations, okay? Dollar came down quite a bit there. E-mini is really pushing up. There's going to be an inverse correlation there with the treasury. So there's going to be a lot of robots and other things that are going to come in and sell the treasury just because of that. And that's why the market maker is probably willing to take those contracts on, because he knows that the chances are that it will continue to rotate within this area. Or at least that's what the algorithm stats are telling it at the moment. And I'm looking for, does the market maker change its mind? Or is something happening with the informed traders where they really just don't care what the market maker thinks right now? That move down, I think that's probably what was happening. But then I want to know, okay, why? So was there a piece of news? Like, if there was a piece of news, that could continue, right? But if it was because the E-mini was moving up, and especially where the E-mini is at right now, then I don't know if that can really continue. Hence, you get 2 ticks, and then it kind of starts to... what is the word? Balance itself back out. Well, I could try one more contract there if they're so kind. We had the ability to harness all the energy you waste. It's not a waste, man. If it, like, here's why it matters, and I think I can prove this with logic pretty effectively. Okay, trading is using information to make decisions about a position in an instrument, right? You don't just, everything is based off of information of some sort, right? And the way that you make money is by having an asymmetrical information advantage, right? So like you could flip a coin and make your decision off of that. When you flip a coin, information is generated. This is like quantum physics kinds of stuff about how that works. But when you flip a coin, information is generated. But does that information give you an asymmetrical advantage over other market participants? It doesn't. But if you know why a particular move is happening, does that give you an asymmetrical advantage over the market? It can, especially if it's something that all of the retail traders don't know about or frankly don't care about, because we think, oh, we can just trade it all off of technicals. And then I can come in and I can go, oh, well, the reason that they sold there was because of Brexit. And now they don't think that it's all that pertinent to the US market, so they can continue up. Like, that's an advantage, right? Now, are you always going to be able to figure out? No. Sometimes it's probably more effort than it's worth. Sometimes, is it always going to give you an advantage? No. But it can give you an advantage. It can give you an advantage. And in the situations where you do understand what's going on and it gives you an advantage, those can be really, really amazing trades, right? But you don't ever know the why. That's not true. Sometimes you can definitely know the why. Or at least you can have a pretty strong case for why something is happening. Like, you know the piece of news that it's more reacting to, or you understand the market positioning that's causing that situation. Otherwise, you run into a system that just ends up being, that will always end up being too simplistic to be able to explain all markets. You'll get a system that when you get this one kind of system, because that system explains the behavior in that market really, really well, it will work. But then when those conditions don't exist, it doesn't work anymore. Like if we're trading a moving average crossover strategy that requires markets to move a certain amount, and the markets are very, very range bound, and it doesn't flip in the places that we expect it to, right? There's no way to verify if you were right. How many contracts does it take to move a tick? Well, that's kind of the fun thing about it, right? You don't actually know. I mean, typically speaking, if you really wanted to move a tick in the 10-year treasury, you would need about 3,000 contracts. You hit them with a 3,000 contract buy, and the market might react to that and tick up, and you might clear the price. But you can see here that often they're ticking on only 300 contracts or even less than that, because the market maker pulls his thing. And that's because the market maker knows that there's some informed traders buying into him. So he pulls his bids so that he doesn't have to take those contracts on. Anyways, there's no way to verify if you were right. There would be. I mean, you take a guess, but there's no way to ever find out if that guess leaving you thinking you're correct when it could just be something else. So there are definitely, I mean, so if I hear a message come over the news squawk and I see the market plummet 10 points all at once, I suppose that in order to completely verify that, I would have to go and ask every person that got involved in that market why they took the trade that they did. And then I would be able to determine that it was because informed traders heard the news and sold, and then other technical traders followed that. Right. But if I see a move that unusual and it coincides almost directly with news, I mean, come on. What do you think actually caused that move? Was the news. No duh, right? And yeah, or it could be, but honestly, but there's the probability of it being something else is very, very low, right? So that's where, when we come into the treasury, we have to ask ourselves, okay, if I'm seeing informed trading, or trading that has a high probability of being informed trading, at least, why are they taking that, right? In that situation, I could see the correlation, right? I could see that the dollar was coming back there. So, and the E-mini was moving up, and so that's why robots were coming in and selling those prices. But you can see here, it's kind of ranged around it since then, right? Because we knew, we had a pretty good idea of why those orders were coming in. Now, I might say, okay, that's probably just a correlation. And then I get even more informed trading coming in at 27, then I have to think, okay, something else is going on. What's that something else? I probably don't want to try and buy that or put orders on limit until I know what that is. So even if I try and sell it on limit, you're probably not going to get filled on those, right? At least with the way it's trading right now. But back to the point. You have to have an informational advantage. Asymmetric information advantage. That is the only way to generate excess returns, consistent excess returns. Otherwise, it's luck. Now, informed trading could be that when a certain technical pattern happens, the probability of it turning out into a certain outcome is higher in one direction than the other. That could be informed trading too. I doubt you're going to see a rush of volume off of a technical signal, though. Yes, plus you need to know where people are caught giving up. Yeah. Well, knowing, it seems to me that knowing where people's average positions are at and the point at which they're kind of screwed over is a really important thing to know in order to know how far it's going to go and whether or not it's actually worth it to play it, right? Mm-mm. Well, the E-mini going pretty sideways here for a while now, hasn't it? I agree with that, but the why question just seems like a waste of energy. No, it's not. It's not. I mean, the goal here though is to know enough about the market to have a pretty good idea of what's going on, right? So if I'm trading the treasury and it's like yesterday, it was moving up, and I'm like, well, why is it moving up? Well, it was because of Brexit, but I didn't really realize that at the time. But now I realize, okay, treasury market, a little concerned about Brexit, right? If I don't know what the reason was, and it was a significant move, I think that we should find out so that we completely understand the context. Because what if that continues to be a strong force going into the market tomorrow, and then you'll be just as clueless about why it's moving the next day and being able to get a good spot. Never trust a pommy? What does that mean? A pommy. I've never heard that word. Pomeranian? All right, I'll Google it. Never trust a pommy. It's probably going to be something awful. Oh, it's a racist word for, well, I wouldn't. It's to describe an immigrant from the United Kingdom. Ugh. It's the freaking Brexit, man. Brexit has put a wrench in a lot of trading lately, but they threatening it again. Not too sure about that one. Wow. It looks like in the E-mini we ended up working it out and taking about what we want to take, but in the treasury I've had some issues. Started out really good, but nah, it kind of turned on me at just the right time. There was quite a peak in volume there, though. That might have been one thing that might have given us a signal to have gotten out of that. But that's my point. You don't know why you think you do, but it could be. Well, so on why did the treasuries move up yesterday? Yeah, in that situation, we need to have a number of theories, right? But the best theory for why the treasuries were bid yesterday were 1, Brexit, and 2, demand for the auctions. Now for today, I think still Brexit. But I'm starting to wonder if I don't know, because the E-mini doesn't seem to care about Brexit, does it? The E-mini doesn't seem to care about Brexit, does it? Okay, so look at that. Market makers still not that interested in holding a lot at 28 halves areas. How do you confirm that you are correct? I think that you have to investigate the evidence and make a determination with the highest probability. But I think that's the kind of the skill that you can't teach, is you're either good at understanding the market and why it's doing what it is, or you're not. And I'm still of the opinion I haven't found a consistent enough signal to convince me that I can make decisions just off of the information generated by other people. Right? So this is, if I go back, because really the argument that's being made is you want to be an informed trader. How do you become an informed trader? Since we can investigate, sure, you can investigate. You read a lot of news, you talk to a lot of other traders and people that are knowledgeable about these things. And there are news outlets that talk to large institutions, and they ask those large institutions why they made the decisions that they do. And then you come out with a list of factors that were affecting that market that day. Right? But the goal is to become an informed trader. How are you going to do that if you just ignore any reason for anything happening, right? Then all you can do at that point, the only piece of information that you can use is the information that's generated by the market. And because that information is already generated by the market and is already in the stock, somebody already has used that information to make a decision. The amount of edge that you can point out from it is going to be limited. How many market makers? Well, I'm looking at the news, and based off of the news that I've read yesterday, it sounded like that the large institutions were bidding up the treasuries in part because of Brexit. I mean, there was an auction yesterday too, but you know, it kept going after the auction. Really never quit yesterday, actually. So the news, they are known for digging into the actual reasons the market moves. They have the pulse on the market makers. Well, it's one source, yeah. But news is, so it's going to be any piece of information. I mean, that's the whole thing here, is that in trading, you have to make decisions using information that you have, and that information is never going to tell you 100% what is actually going to happen. Because if it did that, then the market would already do it. That edge already gets taken out, right? Like, that's the way that the market works, is you take information, you insert it into the market, and then the market adjusts based off of that information that you just input into it, right? It's converting information into trades, which then influence the direction of the market. And you're never going to have a definite knowledge of anything. But if you don't have any information, you're guessing. When you take a trade, when you take a trade based off of a price crossing a moving average, you're guessing. You don't have any idea if it's actually going to go up or down off of that. Frankly, you might have a historical stat that says that maybe it continues over 55% of the time, but you don't know if that stat is actually going to continue into the future. There's absolutely no way to know that. You are taking one piece of information. It doesn't tell you everything. If the information told you everything, there wouldn't be a need for a market. The reason that you need a market is because different people have different pieces of information and none of them have the complete picture to 100% know what's going to happen. If we knew that, then you would just have a central planner plan prices, but we know that that's impossible to do. So you have to have information. Right? The more information that you can acquire to generate an informational asymmetry over other players, the better. That's really what it all comes down to. Yeah, but I'm not wondering why the market just made that move. Sure, and that just means that that's an informational advantage that you won't have, or frankly could be a disadvantage to you. And this is why also why retail trading is so hard, because the informational advantage that large institutions have on us is so huge. Even if we just take it from a technical perspective, right? I can go and I can run a back test, and that firm has the hardware to run that same back test that takes me 20 minutes. It probably takes them half a second, and they can have their algorithms try new variations of it for them, thousands of times a second to mine more information out of the market, essentially. Neither of us knows the why, but one of us thinks it. In some situations, I am pretty confident. I think I know why. Yes. You have to make some decisions about, I think that this is why Xing is happening, and act on it. This presupposes, again, that there's like some sort of definite knowledge, that you can ever have a definite knowledge of anything. In mortal life, you simply can't. You might have one piece of information and then you find out that it's more complicated than that, right? I feel your confidence is misplaced. Well, I don't think that it's a matter of confidence, man. I think it's a matter of, if you're going to be an informed trader, you've got to acquire as much information as you can, and you've got to try acting on it, and you've got to just go with wherever you're at the time. Even if you understand that the amount, and really we do need to understand that the amount of information that we might have compared to a bank is extremely limited in almost every facet. I just don't agree with that no one really knows why the market makes a move. There are varying probabilities. Right? Every time that I've done really, really well, it was because I had information about the market that retail traders, ignored or weren't aware of. So I think the best example was the August crash. Are we going to call it a crash? The gamma crash in August. So I was reading a lot of information. I was looking at a lot of stats. I knew a lot about what was going on with the gamma. And I knew that when all of that gamma expired, that the markets were likely to come down. And I knew what to look for. I had been thinking about it. I was like, okay, like it's going to come down. This is what the order flow is going to look like. This is the way that the market's going to react to it. And then when we started to see it, we traded off of it. And I remember those days going on Reddit and seeing dozens of posts from people. Why did the market crash today? And I'm like, do you guys not read the news? Yeah, you have no clue what's going on. But the reality is they didn't have that piece of information. And was that why the markets? Well, you could argue that it did or it didn't. But I'd say based off of the way that it all turned out in retrospect, we can say with pretty high confidence that it was because of the gamma crush. Right? Informational advantage. And we did really well on that move. I gotta go. I've been yapping too much. I will catch you guys tomorrow.